Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back through daily crypto news and analysis, and today we're going to be talking about Ripple and XRP, so let's just dive in and let's talk about a few things. So at the time that I am recording this, it is nearly midnight. We are seeing Bitcoin still fighting around the 20K range. I do expect this to come down lower, but I am actually expecting this to have a little bit of a nice ride today, and the reason why is because today is the monthly candle close. Now, in regards to the last monthly candle close on Bitcoin, which we could take a quick look at, yes, I know that this is an XRP video. I get it. I know that a lot of people don't like me talking about, for example, Bitcoin, but I want you guys to understand that it is actually very logical to do so. The last monthly candle close that we had was May 31st. We were sitting at around 31 point almost 8K at that current moment in time. Now, I'm not too sure if we will get another run up like that. Maybe we'll go to like roughly the 22K range. It's hard to say, but our monthly candle close is not looking pretty good even at our current level. So I'm definitely watching closely today as we do range into the monthly candle close, and I definitely do think everybody should be watching it closely as well. But also in regards to the overall market and the market health, because I did a live stream earlier today, and I also made a video on XRP earlier today where I was addressing the market, and I was telling you guys, like, prepare for, whatever case may actually happen. Because, again, nobody really knows exactly what's going to happen in this market. But having capital on the sidelines, paying off your debt, if you can, and, stacking fiat on the sidelines is the best thing that you could possibly do right now. But we do see here, breaking British Virgin Islands, court reportedly orders liquidation of 3 Arrows Capital. The issue that I have with this, so we actually do see over here, let me refresh this. I don't know what's up with this ad being on like the center of my screen. But we do see down here the court filing for the same was made on the 27th of June. As per the report, the insolvency of the Singapore-based company, will be handled by partners from Teneo Restructuring. Now, of course, there is quite a bit in regards to debt here, $650 million. But the issue that I actually do see here is the fact that they are still being utilized by customers. We actually do see here the company is still completing orders and withdrawals from customers. In contrast, some other cryptocurrency exchanges had to halt withdrawals after exposure to 3AC. So this is not looking good at all. And I would say, prepare for liquidations to happen from many of these large firms and exchanges too. Remember, FTX CEO Sam Bankman-Fried says some crypto exchanges are already, secretly insolvent. And, when we really kind of look at this is why I've said, take your crypto off of exchanges. I tell you guys almost all the time now, because it's getting, scary out there, especially if you are holding your crypto on a centralized exchange. Now, also, in my, live stream today, I actually mentioned a little bit about this, but for those that weren't available to join in and listen in, listen closely to this part. This is the part that really kind of shook things up for me, at least.
One way to say it would be, I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this was unpredicted. I was looking at our at the time of our June meeting 1 year ago. Of the 35 people who filed with a survey of professional forecasters, 34 of them had inflation below 4% for last year. And of course, it was way above 4%. So really everyone had the same model, which was the Phillips curve model, and it just was not capable of producing high inflation. But what it was missing was something that's completely missing in the data for 40 years, which is basically a collapse of the supply side. Yeah. The U.S. economy is famously adaptable. It has the minimum of structural rigidities, all that kind of thing, and yet here they are. So what you have, one way.
And it's funny because 45 minutes in, we're seeing a quote here. Jay Powell finally admits that the models and analysis used to determine inflation has been wrong for 40 years. The funny thing is that not only does he say that it's been wrong for 40 years in regards to inflation, but he also says that they have no idea how this works. Listen closely again.
I think we now understand better how little we understand.
I mean, come on. These are individuals that are basically playing games with the entire economy. It's funny. And we do see down here, if you let that video run for a few more seconds, missing from the data, the collapse of the supply side, given we see 8% right now, yeah, the model doing 4% sounds accurate. If not, for the issues from the supply chain inflation. It is possibly correct, but the problem here is the fact that inflation is nowhere near 8%. Inflation is far higher than the 8% that they're letting on. They're trying to save face, they're trying to save the markets, and they're trying to play this, game of, let's play blame. Like, for an example, the entire time during this, meeting, we've seen Jerome Powell continuously say that, it's not the Fed's job, it's not the Fed's job, it's, the government officials. And it's just like, listen, if you can't own up to the fact that you printed, a massive amount of the U.S. dollar in circulation, which, by the way, it's like 80%, in circulation in the last 2 years alone, then, there's an issue, okay? But also, we did see over here, regardless what they do at the next meeting, by the end of the year, the Fed will cut interest rates and print more money. And this is from Johnny Deaton, and this is actually, quoting a tweet that was from the other day from, Michael Burry, which is, the famous, character in regards to the Big Short movie, and it suggests that the, bullwhip effect happening in the retail sector may lead to the Fed reversing reversing rate increases and its quantitative, tightening policy. Now, I told you guys that I'm waiting for the Fed to pivot fully because that is actually going to be very bullish for crypto. It's not going to be bullish for the economy because, again, remember, they'll most likely have to, print money, which, again, during an inflated time frame, it's not good at all for the economy. But also, again, cutting interest rates. This is not good at all, but it will allow for the dollar to, lose a ton of value, lose a ton of strength, and it will allow for risk on assets like stocks and crypto to take over, similar to the March of 2020 timeframe. Now, also, we do see here from Crypto Airy, Sumitomo Mitsui Banking Corporation, operating in 40-plus countries, the 12th biggest bank in the world by total assets, invested in MoneyTap, a Ripple technology. SBI will accelerate business development by increasing the number of connected financial institutions to MoneyTap. Now, the interesting thing about this is that they're going to accelerate business development by increasing the number of connected financial institutions to MoneyTap. Remember what I told you guys about Finastra and Tranglo, how they have a massive amount of financial institutions signed up onto their services and their overall payment infrastructure? Yeah. This is why that is a key aspect to watch for with a lot of Ripple partners. I've said it time and time again, and I've actually said it even with Quant, right? Because Quant is actually partnering with some large partnership, clients too. By the way, real quick, there's a ton of FUD around XRP and QNT on Twitter. I want you guys to know that it's all noise. Just accumulate both because I do believe that both will be utilized massively going forward. And of course, do your own research. It's not financial advice. But in regards to this, right? When you look at things happening around the connections, these major, payment services and overall revolutionizing technology will be interconnected and connected to massive amounts of financial institutions all at once through single entities. For an example, MoneyTap here. MoneyTap is the key that will basically allow for Ripple to be interconnected through massive amounts of financial institutions in regards to what SBI is trying to do here. And remember, SBI is also the company that said XRP will be utilized by all banks in regards to Japan by 2025, which is 3 years away. I'm totally fine waiting 3 years. And also, we did see from the Digital Pound Foundation saying yesterday, Digital Pound Foundation member Ripple launched their CBDC Innovate challenge to promote the building of applications for financial inclusion, interoperability, and retail CBDCs upon the XRP ledger. Now, remember, okay, I've said it time and time again, I do not like retail CBDCs. I've said it so much to the point where it kind of gets sickening even trying to mention it again. But it's the idea that retail CBDCs are not good. I've always said like a wholesale CBDC for central banks is totally fine. I welcome that fully. But we know that a CBDC, in regards to the retail individual, is going to get pushed eventually. And we can't stop it. There's nothing we could do about it. This technology is going to be utilized for these CBDCs for control of the financial system. And there's nothing we could really kind of do about it. But what we can do is invest in the technology that will be the foundation of this technology, if you will. And I know that I just said technology twice, but that's exactly what it is. The CBDCs are technology built upon technology that allows that technology to be utilized. I know that I just like kind of confused it a little bit more for you guys, but that's basically what it is. So, to me, when we really kind of look at this, like, yeah, sure, I don't need to support retail CBDCs to make a ton of money off of them. I could just support the infrastructure that basically they're built upon. And even if I didn't support the infrastructure, guess what? They would still be here. And also from the Digital Euro Association, they are also mentioning the newest edition of the Ripple CBDC series is published in this article. The primary benefits and challenges of CBDCs are addressed in a comprehensive overview. And here we have it. This is a full-on article. This is going back to the 15th of this month. They do outline the fact that, again, 90% of central banks are now exploring implementing central bank digital currencies. It's no big surprise, especially even if we go back to this initial, meeting. They talked about what central banks are basically doing as well, and they have talked about digitization during that, meeting as well. To me, we are seeing a major change happening around finance and monetary values to the point where we will most likely see DLTs and crypto being adopted in massively within the next 1 to 2 years. And, by 2025, things are going to rapidly be different. But we also do see down here, in our two most recent posts on CBDCs, we explored their potential to advance financial inclusion globally as well as the hurdles to realizing this ideal. CBDCs and more generally digital currencies have many different applications and use cases, including as the core of more efficient transactions and drivers of economic growth. In fact, a survey of over 1,600 financial institution leaders globally cited utilizing blockchain for payments as a key driver of efficiency. 1,600 financial institutions. Think about that. I want you guys to understand the scope of the volume that is probably moving over those 1,600 financial institutions. That is absolutely insane. Remember, Ripple only had 300 signed on. So think about like the amount that they will basically have, with MoneyTap with SBI, for an example, or even Tranglo or Finastra. Like the connections to Ripple and XRP is truly remarkable, especially from the financial institutional area. But we also do see key use cases and practical applications. The primary benefits of CBDCs include superior transaction efficiencies efficiency, as payment settlement time is reduced. We already know with XRP, it's instant settlement. We also do see, technological advancements of a decentralized blockchain working in conjunction with a centralized authority that leads creation, privacy, and distribution of digital currency, financial inclusion through elimination of expensive third-party fees for cross-border payments, and increased accessibility to payment channels. So when we really kind of look at this, CBDCs definitely have all the primary benefits that, digital assets themselves have. So, when we look at like ledgers in this space, I do think that ledgers will play a pivotal role. This is why I've always said, pay attention to DLTs and pay attention to the technology stack within those DLTs, because that is what's going to matter the most. And of course, they talk about privacy mitigation and, a whole bunch of stuff within this area. To me, there's a large focus on, just DLT adoption. I think that DLT adoption for the longest time has been put in the spotlight. I've talked about this even with Quant, Quant basically being the interoperability layer. I know a lot of people bring up like Interledger Protocol with Ripple, but it's not really the same thing at all, especially when you look at like the connections that Quant has. Also, Ripple is already working with Quant. They are on the board for, Digital Euro Association, also the Digital Pound Foundation too. Like they're both members of both of these organizations, and to me that really kind of solidifies the fact that like they will both be utilized within the system. To me, Quant has always been the rail, roads that will allow for the data to be transacted over it, and will basically be the network of networks, which was also funny because, the Interledger protocol had that branding initially too, aka the network of networks. But, API gateways with a 3-line code to set up instantly without changing any sort of infrastructure within the system. That's something remarkable, and also, tried and tested, proven interoperability between legacy platforms and DLT platforms. You're not getting that anywhere else. So, to me, Quant and Ripple definitely play a pivotal role here, and when we really kind of look at things, it's inevitable. I think that when we really kind of look at CBDCs, they will basically be ushered in no matter what we think, no matter what we say, no matter what we do. And also in regards to the Fed, I also do think that they have no choice but to basically cut interest rates and print more money at some point in time. And I do think that the Fed will eventually pivot massively soon. So with that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.